This is Brent with Black Lion Capital Management and the U.S. Petroleum Report for Wednesday, March 16, 2016, featuring Update Analytics. We're going to emphasize the Update Energy feed today. We'll also incorporate data from CME Group NYMEX, the Energy Information Administration, and we'll touch on Baker Hughes. Highlights from this week's report: we had another marginal production decline, a century-low total rig count, commercial crude oil added 1.32 million barrels to set a new all-time record, diesel fuel and gasoline both experienced drawdowns, and we'll spend some time talking about the Update Energy feed and its added value. This report that comes to you each week is a joint venture between UpData and Black Lion Capital Management. It helps showcase some of the features that are available in Update Analytics and via the Energy feed, as well as provide relevant research to Black Lion and UpData clients. Recently, UpData has made some outstanding improvements to the software, and I wanted to visit with you about those today. This is a press release from UpData's website, and it mentions here that version 8.2 is now an enterprise version and supports 64-bit architecture, and then we'll also review later on the UpData libraries, layouts, quote lists, and trading strategies, but we'll primarily focus on the layouts that are available to UpData clients. Historically, all of this data is culled from the internet. Well, first let's review the version I am running. This is the enterprise version of Update Analytics. This is 64-bit architecture running on a 64-bit operating system. If you have that available, talk to your IT support folks and talk to the technical support folks at UpData and see if this is an application that would add value to you. Historically, this report is culled from different sources across the internet, primarily from the EIA. We talk about that each week, and their petroleum status report. And what that comes in form is a rather large spreadsheet that can have all the different storage, production, and different regional data that we cover. However, this isn't necessarily compatible in this format to go into Update Analytics. To do so, I take the data from that spreadsheet and enter it into a spreadsheet that's compatible with the custom instruments that are available through that functionality in Update Analytics. It can be somewhat time-consuming, and there is a fair amount of calculations that go on behind the scenes to help us calculate whether we've got surpluses, deficits, and whatnot. Additionally, to explore the Baker Hughes North American rig count, go to their website each Friday. This can come to you as a spreadsheet or in PDF format. Let me drag this down here for you. That gives you all the relevant changes in rig count. And then this data was also entered in spreadsheets like I'd previously mentioned. Well, now thanks to the hard work at the folks at UpData, the Update Energy feed has been expanded to where now all this data is available to you. So if you'd like to explore that, go to Create a New Instrument, go into UpData, Fundamentals, Petroleum, EIA for the United States, and then here you can see we have almost all of the data that's available on their website is now available here to you via a standard instrument interface that you're used to in Update Analytics. So if we wanted to go through here and say what is the ending stocks of crude oil, merely select that and you've created the chart that shows commercial crude oil storage that we'll cover in a minute. Additionally, what's been added, we'll back up here and go into rotary rig count, go into Baker Hughes for the United States, and you'll see all the different rig count. So if we wanted to see what the rotary rig count for land is, there it is, just with a few clicks. So no more going and culling this data from websites manually and entering it in spreadsheets, even though that's an outstanding capability in Update Analytics. Now that capability is available to you real time via the Update Energy feed. Additionally, we mentioned the ability to share layouts. This particular layout that you see here, this workspace, this does include a custom indicator we mentioned there. You now have access to this. So if you'd like to set a desktop up that looks like what I'm looking at each week, go into Desktops, Library, Update a Feed, and then come down here to U.S. Oil Fundamental Report and download. Selected layouts have been loaded to your layout directory. If we want to add a new workspace, Desktop, load, and you'll see U.S. Fundamental Oil Report. and now you have the exact same workspaces that I work off of each week. So some really exciting new capabilities with the enterprise version of Update Analytics, the ability to share these workspaces and different custom indicators through Update as libraries, and then the added value of the Update Energy feed. Let's get into this week's report. All this data on this particular workspace this week does come to you via the Update Energy feed. Each week, what my plan is to convert the other workspaces over to the Update Energy feed, but for now, it'll just be this one. Beginning with U.S. continental production for the lower 48 United States, we did have a marginal decline in production below 2015's recent low, and you can see here that the 52-week moving average is definitely sloping down. So we are seeing the positive correlation we've been hoping to see by the virtue of the reduced rig count is being reflected in reduced production. Over to U.S. field production, this is the lower 48 plus Alaska, so this number is slightly higher. But again, we have another marginal reduction for the week down below the 2015 low. And again, we do have the 52-week moving averages rolling over, beginning to slope downward. And we are seeing that correlation from the reduced exploration and production activity being reflected in actual production. Commercial crude oil storage, we mentioned at the top of the report in the bottom pane there via that custom indicator I discussed, 1.3 million barrels added to storage and a new all-time record well above the 2015 record. Previously, I'd done the seasonal comparison chart. What I've done here is I've actually managed to do this entirely using Update Analytics. So what we have is commercial crude oil storage in the top pane, and then the silver dash line instead of a 10-year average of storage. What I've done is I've used the seasonality function to show a 5-year average of storage. Then I've done a spread function between the two of those to show the surplus down here in the bottom pane. So you can see the storage 5-year average is the silver dash line. The difference between those two shows up as the surplus in the bottom pane, and you can see that all year that surplus has been increasing. So this is all done entirely within Update Analytics. Cushing, Oklahoma set a new record, not surprising considering the new record in commercial crude oil storage. Total petroleum storage is back in the news this week with a new all-time record. Again, this data is available in the Update Energy feed. The Baker Hughes U.S. rig count for oil, so this is just rotary rigs exploring for oil in the United States, down to 386, drawn a brown dash line back across here. That intersects back to about December 2009, so very suppressed upstream exploration and production activity. However, to help prices, that is beginning to be reflected in the reduced production. However, production has been very slow to decline, consistent with this reduction in exploration and production activity. Total rig count, so this is all rotary rigs in North America. This is rigs exploring for oil and natural gas, down to 453 after we stacked out 12 rigs last week. The brown dash line, the data for the Update Energy feed and Baker Hughes actually only goes back to January of 2000. Some of the data I'd previously kept went farther back than that. But for our purposes here, we can go back and see it for every week that's recorded for this century. We are well below that, and every time we stack out additional rigs, we'll continue to set new all-time low activity levels in exploration and production, and hopefully that will continue to decrease production and at some point maybe even begin to eat into this storage overhang and support prices. All the desktops going forward, these are the same ones that we look at each week. Like I mentioned before, where applicable, I will be converting these over to the Update Energy feed where that's available. We always start with seasonality. Top pane is NYMEX Light Sweet Crude Oil Futures. This data is from the Update Energy feed. They're continuous contracts, so this is roll adjusted. And then the bottom pane, what I've done is the 10-year weighted average of seasonality. Zoomed in on 2016 here. If you scroll back here through any of the years, you'll see the same trend. Relatively flat the end of January, and then we get seasonal support all the way up until the end of April. You can see up here in the pricing that really since this seasonal trend has started early February, crude oil is tended to trend higher. This is the daily cloud chart. We'd look at this each week also. This is beginning to get just a little bit more bullish. Things that we look for: price above the cloud spans. Cloud spans are positive, as indicated by the light blue area there to the far right hand. The green turning line above the standard line, price above the turning line. So there are things that are definitely lining up bullish here, but in order for this to be a meaningful trend change, we need that blue lagging line to come through the clouds and have a close above there. So really what we'll be looking at is somewhere in the $39 to $40 range before that became a factor. Shift T and Update Analytics. This will draw a 3-box reversal point and figure chart. I've set this up for a 1% logarithmic box size. Still working below the bearish resistance and below the intermediate downtrend lines. One positive upside price target to $41.30, one downside target to $15.43. So an improving picture, but not a bullish trend yet. We're at a 60-minute chart for a little bit more fidelity. We're recording this afternoon about 45 minutes after the FOMC announcement, so there has been quite a bit of volatility short term in the market. We came down here, bounced off this intermediate support line. As far as active targets we have right now, $39.70 to the upside, $33.50 to the downside. So just kind of an opposite directions there, but consistent with that seasonal trend, we are trading above bullish support, well above this old bearish resistance line. So we do have an intermediate uptrend. We are going to keep an eye on this, consistent with where as we get near the end of that seasonal strength. The actual futures, this is a 15-minute on close chart. This is CLJ6. This is April NYMEX light sweet crude oil futures. Down here this morning, it was really very benign. The market today has not been driven by these fundamentals. I would love to tell you that it has, but this huge spike here has really been driven by the announcement that the Federal Reserve is not going to raise interest rates this week at the meeting they just held. So there's a lot of support there for crude oil because the dollar index has declined, and we'll cover that next. We always look at correlation between the dollar and crude oil. Top pane is NYMEX light sweet crude oil futures. The heavy green line is the dollar index. The blue line is the all-time correlation between these two instruments. It is an inverse correlation there at a -80, so not surprising that when we have the dollar down, we have crude oil up sharply. The bottom pane is a short-term correlation. This is just the last 65 days that we're looking at in the bottom pane. See, we started the year down here negative, spiked all the way up to a positive correlation, and that is since rolling over, and today's price activity is only reinforcing that. We can zoom in a little bit farther, and as you can see here, that this is when we were in the positive correlation part of the band. As the seasonal strength started, there was a little bit of dollar strength, and then as the dollar is rolled back over, we've reestablished that inverse relationship, and you can see there where the correlation has trailed off. And with today's activity right now, April crude oil is up almost 4%, and the dollar down nearly 1%. So quite a bit of an inverse relationship being reestablished today. The forward curve, this comes to you via the update energy feed. Go back and look 5 days ago. We had initially been down at all delivery points. That's not very bullish. But then with today's activity, thanks to the Fed, we've made quite a bit of that up on the near part of the curve. Over to ULS Diesel. All the charts on this are the same that we've always looked at. I've not incorporated the update energy feed to this workspace yet. We will be doing that in future weeks, and these layouts will be available to you to download if you would like to do so. ULS Diesel, mentioned at the top of the hour, both this and gasoline had a slight drawdown. We continue to stay well above the 2015 record, flirting with its all-time high. The seasonal comparison chart, this is one that I've calculated manually. We use a 5-year average. That's the blue dash line. The prior 14 months of storage is the shaded purple area. The delta between those two is displayed as a surplus here in the bottom pane, and you can see that surplus has remained relatively stable. That while we've drawn down diesel fuel the past several weeks, we've also seen that historically that's what happens this time of year, so we do have a stable surplus. Seasonality for ULS Diesel looks similar to commercial crude oil. If we do come over here, you can see we just came off a time of weakness. We've got a little bit of strength left through the end of April, and then that'll begin to tail off. The daily cloud chart for diesel also looks very similar to what we saw for crude oil. Price above the cloud spans. The cloud spans are turning positive, but we need this blue lagging line to come through, so that's going to happen around $1.25 or $1.30 if it happens before we have a confirmed trend reversal. However, on the 60-minute chart here, we are trading above bullish support. We've realized some upside price targets. Still have this price target of $1.32 here, and I don't believe we can go and look at some automatics. We do have one downside target here to $1.13. Doesn't look like we're going to achieve that though, with this nice rebound after the FOMC announcement today. The 15-minute on close, this is the actual future, so this is diesel fuel for April delivery. Again, just like crude oil this morning, down here relatively stable around $1.19, $1.20 since the Federal Reserve announcement. A sharp spike up as the whole petroleum complex has moved higher on that news. The 1-to-1 crack spread, we calculate this in Update Analytics. This is the difference between ULSD futures and NYMEX light sweet crude oil futures. So it's just straight 1-to-1 gross margin profitability for those two products. We got down here earlier in the year down to 7.5, well below where we were pretty much all of 2015, trading up in the mid to high teens. We have rebounded some to about $13. The forward curve for ULS diesel. 5 days ago, very similar to what we saw with crude. We're down here in the out years. That's not helpful. But with today's rally, we've made all that up and then some on the near term. Gasoline still remains well above its 2015 record. We did have a drawdown this week. Over to the seasonal comparison, the light blue dash line, we go back to a 10-year average. The delta between those two is the 26 million barrel surplus you see here in the bottom pane. Seasonality for gasoline, we have this strong seasonal trend February and March, then we tend to move sideways, and then once we get into the summer months, this trails off. We can move the display window out of there. If we go back to 2015 and see we were flat through the summer and it trails off in the fall, we're now in the time of year where gasoline is generally pretty flat from a seasonal perspective. The daily cloud chart for gasoline, similar situation to what we saw last year. When we have this roll on the forward curve, there's a large spike up. This particular instrument here is not roll adjusted. This is eSignal's continuous contract, so you can see the large gap. But we do have both the price and the lagging line above the cloud. Cloud spans are positive. This is showing the characteristics of a positive trend. Shift T on our updated system. When we go to the 3-box reversal, with the 1% logarithmic box size, we're still trading below this long-term bearish resistance line here, so you do need to be aware that not across all time frames and setups is this necessarily bullish, but we did have that huge gap move up thanks to the roll in the contracts. The 60-minute chart, again, we see this large column of X's. This was the gap as we rolled the contracts, and one of the things we need to be aware of when we use non-roll adjusted data. However, we are well above bullish support, well above intermediate bullish support. We do have another positive price target here we need to be aware of, up to $1.65. And then there's one downside target to $1.36, but not very relevant right at this minute considering the bullish picture we're seeing for gasoline. The 15-minute chart for gasoline, so this is April gasoline futures. Here at $1.41, this has been extremely benign today. Hardly any movement at all in gasoline futures, either from the fundamental announcement or the FOMC. 1-to-1 crack spread for gasoline. When we saw that contract roll, we did get the sharp spike up that we do, but it's appearing to be running out somewhat. We'll keep an eye on this. But a lot of this is going to be driven by the fact that we are still trading, we are still well above the 2015 record storage, so there is definitely an excess of gasoline available. The forward curve for gasoline. I had this problem last week. For some reason, this one is not updating as quick as it normally does. But you can anticipate that it'll probably look much like ULS diesel. There we go. So there's there's the previous date, and you can see that it is up substantially from where it was in the previous period. This is Brent with Black Lion Capital Management and the U.S. Petroleum Report, featuring the new Update Analytics Enterprise Edition and Update Energy feed on Wednesday, March 16, 2016. If you have questions or comments, please feel free to contact me directly. If you'd like to learn more about Update Analytics and the Energy feed, please contact them and visit their website. If you're already running Update Analytics and like to know how to incorporate some of these new features, please reach out to their excellent support team. Thank you and have a good day.